What's up traders, welcome to Failure to Displace. In this video we're going to analyse the London session this morning. I'm going to take a look at pound USD because this is the currency that gave us the actual setup, and we'll also take a quick look at Euro USD as well, just to see what opportunities came to us on that pair with the 2022 model. So let's jump straight into the analysis now. Start the analysis, we're going to first look at pound USD because this is the asset that actually gave us the trade, the 5-minute OTE strategy. I'm going to take a look using the liquidity tracker to show us our session liquidities that have been untapped. So we can see we've got relative equal lows below us. Asia has come down, has been unable to take the New York PM session low and is now pulling back inside the Asia range. We've got a 15-minute fair value gap just above us, which we are currently just tapping into now, but I'm also noting that we do have a 15-minute fair value gap below us, which has been respected now on 2 taps. So New York PM session redirected off this 15-minute fair value gap and order block, and also we've come down in Asia again just to retest that fair value gap. London has tapped the top, well, prior to London starting, we've tapped the top of it, and now we are pumping away back into the Asia range. Because we're displacing higher, my initial thoughts are looking for these relative equal highs that were created in the New York PM session. So this is our untapped Asia liquidity high, but also we've got a couple of levels from the gap time between the 2 sessions from the New York PM session here as well. So lots of liquidity at this area, so it would make sense for price to come up, possibly take out this liquidity before potentially reversing and coming down and taking these equal lows out. We'll drop onto the 5-minute. And on the 5-minute, we'll now start scrolling through just to see where we're going to get tapped in. So we are looking for either a sweep of the liquidity at the low for a 5-minute optimal trade entry to go to the high, or as it looks at the moment, we are displacing higher, so I'm more likely expecting that the liquidity is taken in the Asia high for a reversal trade down to the low. One thing I would note actually before we scroll through this, while I'm trading, I do have pound USD and Euro USD open in an effort to take the cleanest looking trade. So we're analysing pound USD at this point because this gave us the cleanest trade. I'll go into Euro USD in a few minutes. So price is pumping up. Have respected that 15-minute value gap and started rejecting away. Wouldn't be looking to take a trade at this point because we haven't taken any session liquidity yet. Price is continuing higher. We have now taken the session liquidity. This would be our break of structure currently for a 5-minute OTE entry. So we would need a candle body close above or below this level, leaving displacement if we are going to get a confirmed OTE entry. The strategy video for that is just in this top corner up here now. Price has continued higher. Okay, so we've made a new swing low at this point. So this is the swing low before we've created the new high. So we are now looking for a candle body close below this level, which we get at that point. So this is actually a really nice price action because you can see this is a strong displacement candle. It's bigger than the bullish candles around it. So this is a good strong displacement candle. Hopefully we get left with a fair value gap, which we do. So this confirms or meets the rules for the optimal trade entry. We've got a break of structure with a candle body close, leaving a fair value gap, also taking out previous session liquidity. We'll pull our fib from the high to the low to establish where the optimal trade entry is, which it currently is just above the fair value gap. So this would be the entry for a short trade with stop loss above the high. Again, you'll see my stop loss is just a couple of points above the high, just to give it a tiny bit of breathing room in case price does want to wick back up to that area. We've just tapped optimal trade there perfectly. So that has put us into the trade. The target, as per the optimal trade entry strategy, is 3R. which takes us to here. Pulling back slightly. Now, how are you managing this? We are obviously quite in good profits now, so we're at 1.75R. So potentially you may want to consider closing out at 2R in these rather tight, low volatility markets. Do have a big pullback. Break of structure. Now this isn't news driven, so this did surprise me at this point. So we hit our 3R really quickly, back into that 15-minute fair value gap. I can't see any news on the calendar for the pound, so I'm not quite sure what caused that. Let's just see if there's any yellow folder news. Trade balance EURUSD 5 AM. So there was no even yellow folder news at this time. So if you know what caused this big drop, do leave it down in the comments below. I'd be interested to find out why we had such an aggressive move so quickly after this consolidation. But this did play out in our favour, so it gave us our 3R trade and then back into the 15-minute fair value gap. You could have been looking to target the daily low, which would have ultimately given you a 4.5R if you were going to hold that a little bit longer. Really aggressive price action. Price just continues lower. So that was the pound trade textbook 5-minute OTE strategy entry. Let's jump onto EURUSD now, and we'll see that we didn't get the setup on EURUSD, so the pound was the one to trade. And so here we are on EURUSD, looking at the same time frame here. We can see that we didn't get the OTE strategy on this time frame. Our break of structure for the OTE entry was right down here. So we needed a candle body close here, which means potentially pulling your fib for an optimal trade entry right the way down to this level here, which is quite far gone in my opinion. But what I did find is when we took the Asia high, I took a trade using the ICT 2022 mentorship model for a short trade coming down on EURUSD. So this is the one that I actually traded. I didn't trade the pound USD. I was more confident taking my 2022 model on EURUSD, which turned out to be a much more technical trade with less volatility. So let's jump onto the 1 minute now, and I'll go through the analysis of why I took a 1 minute 2022 model trade. So here we are on the 1 minute chart. We are just about to sweep the Asia untapped liquidity. So price pumps up, takes that liquidity. So I'm now on a watch for the 2022 mentorship short position. I'm going to delete these, a little bit of extra analysis at that point. So my break of structure at the moment is at this point here. We've now moved up higher. So we're looking for a break of this low, leaving displacements. I want to see good solid candles breaking through this level. We haven't got it at the moment, so price is just consolidating. Now this is where I was a little bit concerned, so this is why this was a tricky trade. We have broken structure. We've got a fair value gap at this point, but I wouldn't class this as displacement. So I was just sitting on my hands at this point, waiting for price to tell me what it wanted to do. That there is a big displacement candle, but we are outside this range, so I'm not going to take a short position off this fair value gap. So for the 2022 model, we want to be looking for displacement within this break of structure price leg. The break of structure was actually coming outside this price leg, so I wasn't comfortable taking a short outside of this range. This fair value gap has been tapped a couple of times, so I wouldn't want to take a short from that particular fair value gap here. So right now I was just getting a bit frustrated, waiting for price to do something interesting. Start getting our pullback. We do respect this fair value gap. And this is where I started thinking, right, potentially we're in. We've respected the small fair value gap now. So we respected it with these candles, the price has pulled back and it's respected it again. So this fair value gap hasn't been closed through. We've now broken lower again. This is another break of structure here. So we've broken structure at this point, and I would class this as displacement. We've got a large engulfing candle here, and then a second engulfing candle, much larger bearish candles compared to the bullish candles, and then there's this large bearish candle as well. So I'm thinking, right, we do have bears in the market, if you like. Price could be dumping at this point. And skip forward. We are left with a fair value gap here. So this was my entry. I didn't take it off this one because I wanted further confirmation. The pullback, we respected this fair value gap. We broke structure again at this point with larger bearish candles. Therefore, I was happy to take a short off this entry. So this is why I'm saying this was quite a complicated trade. It wasn't a straightforward 2022 mentorship break of structure entry. I'm getting an extra confirmation here that price is going to be bearish. So I put my stop loss just above that high. I took the entry on this fair value gap. I took a partial as we break this low. The price comes up, respects the fair value gap. Consolidating, so horrible price action. We break the low. This is where I took 50% of the trade off. So this made me risk free. I've left the stop loss just above the high, so I'm not adjusting the stop loss because price may come back in this horrible choppy price action to entry. So I've not pulled my stop loss to break even, simply taken 50% of the trade off. So this would be a winning trade if this pulls back because I've bagged 1.4. The target is ultimately to take out this low, 2.65. So you can see again, prices come back to entry. This is why I don't like to adjust stop losses. I would rather take partial profits, leaving the stop loss where it is. Essentially, if the price goes above this, then I know the trade idea is wrong. At the moment, if price comes back to entry, it doesn't necessarily mean my trade idea is wrong. So going break even wouldn't be a wise choice. So I can leave the stop loss there. Having taken partials, I know that I am going to end up at least with a little bit of profit. Back again to entry. So again, horrible price action. Back into a little bit of drawdown, more or less immediately bought back again. What we can take note of is the optimal trade for this from the high to the low is just below where my take profit is. Again, when trading ICT, we are looking for sells in a premium and we're looking for buys in a discount. Premium is anything above 50% of the range, so this area here. So this is where I'm looking for sells. Anything below 50% of the range, then I'm looking for buys. Because I've already taken a sell at this point, I'm going to be looking at offloading my position when it gets into a discount. We're just about to pass over 50%. Optimal trade entry 618 is a sensible area to look to offload this, which is why I'm going for the 2.65, taking out this level of liquidity here. So that is sell side. Sell side liquidity at optimal trade entry. The price action is just awful. We do eventually take it, so that closes out for a winning trade on EURUSD. So by far the better setup was on pound USD. This was the more difficult trade that I ended up taking. Kind of regret it, but it was a winning trade. So happy days. Hope you found the analysis useful. It's good to compare the two, as I mentioned, comparing pound to EURUSD, seeing which one offers you the cleanest setup. Been tight markets, it's not been great, specifically on EURUSD recently, which is why I'm taking partials much sooner than I would normally. We just don't seem to have a volatility. Ultimately, we were able to grind out a 2.6R profit on this particular one. And as we mentioned, pound gave you a really, really clean trade with a potential 4.5R. Not sure why we had such a massive drop on the pound at this time. So if you do know, let me know in the comments. If you did find the video useful, please consider dropping a thumbs up on the video. If you have any questions, leave them in the comment section down below. And likewise, if you are enjoying the content overall, then consider subscribing. Dropping videos like this more or less every day. It'd be fantastic to have you on board. And I'll see you again soon in the next video.